Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, April the 19th. The year's 2020. Let's talk trading. Weekly open and gap. Now, fellow traders, you all know these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, always make sure you never lose more on any particular trade than you're willing to lose. Have your risk management in place. Weekly, we've got one gap that hasn't filled, just one. So if you missed out on all the rest, you still have one chance right here. And you can see right now we're 6 pips above the daily / weekly open, but we're still down for the month and down for the year. But we've got, 9 trading days left this month. Anything can happen. We're putting in the the opening range here, the first day of the week range right here. You can see the opening day of the month is here, opening day of the year right there. We're the inside bar here from, let's see, 8 days ago. So we've got a long trigger at 1.0901 and a short trigger at 108.29. So that's where you look to go long, look to go short. As you can see here, we've only got a few opportunities, a handful or so on the daily, ditto for the weekly, and on the monthly, we really only have 2 inside bars at the moment to make the trade. And it's Sunday night here on the west coast of the USA. 3 pairs already over 100. Euro only 20 pips. Dollar yen moving nicely at 49. And let's see here, we took out the pivot. And we've crossed over the weekly open here, heading towards the buy zone. And not enough range, only 20. You can see the rat zones overlapping, giving us some nice colors there, huh? We took out that pivot. Where is the weekly pivot? It looks like the weekly pivot is right here, 108.90. So there's your weekly pivot target for those pivot traders. And when you look at the statistics, at the results, there's not many missed pivots here on the euro. We've got one from a couple of days ago on the daily, but on the weekly, there wasn't one. You have to go all the way back to September 30th of the year 2018. You can see here, it might take a week or two to clear out these pivots, but these weekly pivots seem to be getting taken out on a regular recurring basis. In and out of this upper wick zone here, trying to get back in there. The wall mall method, it's really early in the day. There's just not enough action here. You can see there's a few pips to be had, but not much. And it's really funny because wall mall and I, we're looking at all these different methods and statistics and really trying to fine tune this to see if we can improve the edge. But we laugh at each other because it doesn't matter how many statistics we put on. Once you put the trade on, everything else is out the window. It's all about trade management. And that's the risk management and the money management. Learning to take those pips. One of the things that I'll probably discuss maybe in a video this week, make it the main idea, but it's how much are you really trading for? How much are you really trading with? I mean, if you're trading a dime a pip, what is it you're trying to accomplish here? If you're trading at $1 a pip, what is it you're trying to accomplish? If you're trading at $10 a pip, what is it you're trying to accomplish? I mean, are you trading just for the fun of it? Or are you actually trying to make some real money, some steady income, something that you can use to pay bills or take a vacation with? Even though with what's going on now, vacations are kind of out the window. Or maybe you want to buy a new computer. But let's say you want to buy a new computer. In fact, I know Walmart was talking about one. And let's just say you want to get a really nice computer. It's going to cost you $1,000. Well, if you're trading $1 a pip, you are going to have to make 1,000 pips. If you're trading $10 a pip, you're going to have to make 100 pips. Now, is 100 pips doable? Let's think. If you knock down 10 pips a day, in a couple of weeks, you'd have your 100 pips. You go get your computer, right? So I really want you traders out there, you've got to look in the mirror and you either say, you've got to kind of say to yourself, am I trading real money or am I just playing? I mean, am I trading or am I playing? Because if you're at a dime a pip, come on, you're playing. Unless you're someplace where, $10 a week might make the difference between life or death, money's relative. But here in the States, I mean, if you're not putting up some real money, if you're not trading for some real money, where maybe if it moves against you 5 pips, you start to feel it. I mean, think about it. If you're trading $50 a pip and it moves against you 5 pips, that's 250. 10 pips, that's 500. That's some real money there, right? To some people, some people $500 is just like, eh. They might be trading $500 a pip or more. So that's just something to think about. I know I've talked in videos about the shake point, but because I get a lot of emails sometime and people asking for help and all, and I'm really starting to wonder, are the traders trading with real money? I mean, of course, in the beginning, you start small, you learn, but you have to advance. And if, let's just say, let me put this out there. If you start at the beginning of the year and you're maybe trading a dime a pip, by the end of the year, you should be trading somewhere close to $10 a pip. Maybe halfway through or so, you graduate to $1. But sooner or later, you've got to do it if you want to make real money. Because, when Walmart and I trade, we're happy to take 2 pips. Because if we do that 5 or 10 times a day, we're talking 10 or 20 pips. And to us, that's some real money. And maybe you're only trading part time, but think if you can, make $100 a day trading, and you make 500 a week, about 2 grand a month, that's your side hustle. That's not too shabby, right? Just for starters. And then if you can do it with $10 a pip, you might be able to do it with $20 a pip, or 30 or 40, or you can work your way up. But see, the thing is, when you start trading the bigger money, you get a little more serious. In fact, Walmart and I, we were kind of kidding about it. When we're playing around, when we're testing something new with, a dime a pip or $1 a pip, we're not really as focused, as sharp as we would be if we were trading our normal trade size. So it's just something you guys and gals and non-binary traders have to consider when you're trading. I guess maybe another way to look at it is, if you aren't happy with a 2 pip trade, rather than look for another method that's going to give you 10 or 20 pips, how about upping your risk and upping your lot size, so when you make those $2 or 2 pip trades, you're happy with the result. Because you know if you do that 5 or 10 times a day, it's gonna help you pay a bill, or it's gonna make a difference in your life. But you're trading a dime or a penny a pip, and you make 20 pips or 2 pips. It's not gonna do anything for you. So really, it's just something you guys have to consider. Now, let's see. Price action here once again. Green candle at the line, red candle at the line. You just take the trade. I mean, why not, right? Um, let's see here. Oh, I know what I wanted to show here. I think I'll have to let me just put it over here. There was a trader that wanted to know when the close was above the previous high, and when the low or the close was below the previous low for the day. And I don't know why I didn't think of this at first, but all you have to do is put on the wick zone, because see, this is already going to show you about the previous day. And so if you put on the wick zone, you can see here's one below the low of the previous day. And let's just switch this over to time frame daily. Shoot. Hold on. Yeah, okay, here we go. So you can see here, this is below the previous day's low. Here we have one crossing above the previous day's high. So you see here, this candle is crossing above it. Okay, here's another one, low below, or did I already show that one? No, we had that one. Here's another one, low below. Crossing above the high. Crossing above the high. So you can see these here just by this. I think this will tell you what you're looking for. Like I said, I don't know why it took me so long. And then, for example, here you've got one inside the upper wick zone. Here you have one inside the lower wick zone. So the close is inside the lower wick zone. And here's one that just left the wick zone. That one's left the wick zone. So when you see the dashes, it's inside the candle body. Maybe it's dashes. I could put B, but see, B also means something here. So this is cross above the candle bottom. So you see here, price crossed above the candle bottom. And I don't see any tops at the moment. So I hope that helps you out. Now, I think, was there another trader that had a question? Oh, I know what I want to talk about. I got a message from Trend Trader from back in the day, back in the TradeStation day, because the other day when I showed this screen, I was talking about the M. Schneider or Schneider. I don't know how he pronounced his name, but anyway, he sent me some stuff from TradeStation that brought back memories. And old Wayne Kem, I guess he's still out there trading. I hope he's okay out there trading. But yeah, that was pretty cool, definitely. So hopefully, maybe Trend Trader might even get him to come on talk on a video just for old time's sake. Well, we used to have fun back then. But here, and I'll talk about this chart probably later in the week, but basically these spaces between the lines, price just likes to seek out that next line. And that's just the way it works. It just seems to happen more often than not. So anyway, fellow traders, I hope I've answered the questions, given you some tips, given you something to think about when it comes to size. It's like lifting a weight. If you sit there and lift 1 pound forever, you're not going to get stronger. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, click subscribe, click like, and then click copy and share this video all over the internet. The